Good morning, everybody. I hope you had a great evening. It finally rained here yesterday afternoon and got some moisture out of it. Not as much as they had forecast, but that works. That's okay. Today we will be in the low 80s, mostly sunshine, and warm back up to the 90s by the weekend, which is where we're supposed to be this time of year. After all, it is July, August. As January is on paper the coldest month of the year, July is the hottest, and frankly, we've had a pretty mild summer for this part of the world. Several years ago, we had I think over 45 days where the temperature was over 100 degrees. That was a hot one. So what we had yesterday was a trend day. The selling started early in the morning on the second quarter GDP. Trend days usually yield pause days. Anybody that had an appetite for 2, 5, 7-year paper is out of the market. The primary dealers have to clean up their books. Today is settlement day for all of that. So my guess is we're probably headed for a close today in the 24, 20, 21 area, right down in here where we did yesterday. If you had to guess what the dynamics would be today is post the news, maybe short covering, just profit taking from those that want to get profits in and book them by the end of the month. The knob spread was stable over last night, did not pick up, did not lose any. Had a lot more interest in call buying than we did in put buying from that community. So the market is still playing for unwelcome surprises. The sanctions on Russia responded. Old communist countries, old Cold War enemies are pretty good going tit for tat. Putin struck out at fast food subsidiaries that are 50% owned by Russians, 50% owned by United States partners. So that's the first step, and we'll see what happens. The sanctions on paper look tougher than they actually are because Russia's number one bank was not included in those sanctions. So the subordinate banks, the banks they can now do business through Russia's main bank. So the sanctions really aren't all that great when you get right down to it. They did not restrict any natural gas technology equipment being exported to Russia. They did put it on crude oil, and there's plenty of alternate sources for crude oil in Russia. So, but there isn't for the EU and natural gas. So that's where we are. Venezuela officially is in default. Smart money came in yesterday and bought up the bonds in their stock market in anticipation of settlement. If this would be the third default in 28 years. And where does Argentina go the next time they get desperate and they need money? You wake up, Ebola. Somebody put up an article about flesh-eating bacteria that you can get in the waters off the coast of Florida. You just pretty uncomfortable with what's going on. We're getting hit with a lot. The United States Congress last night voted to sue the White House and Obama for failing to do his constitutional duties. I don't know what the outcome of that will be, but we do live in interesting times. What that'll do, it should add support to the treasuries over time. Put an article up this morning that long-term treasury yields, the 10-year note is headed to 1.5%, and that's based on restriction of supply for collateral and weakening economies. I put the Schiff article up. Schiff is like Faber. They're kind of a voice in the wilderness, talking about things really aren't as good as they seem. We see a lot of those articles, so there's always two sides to the coin. Have to be a reason for you to be a seller or a buyer. So the news is mixed. A lot of news coming out is just uncomfortable. It adds uncertainty to the trading, and that could add some support. So with that said, our first buy is 13 to 17, then 5 to 9. Going to play for a pause day, maybe a little bit lower, get below 14, but not a heck of a lot below that. And our sell is going to be 23 to 27, 31 to 03 for sell 2. Okay, we do have news today. Jobless claims 305. Challenger job cuts. That one's never even forecast. No one pays a lot of attention to it. The Chicago PMI will be the next big piece of news at 63.2. Both of those pieces of news would be supportive for the indexes and not so for the financials. But after we get past the news reaction, we have end of the month, and the obvious profits would be from those that are short. So we'll probably I think we'll get a little short covering today, but not a lot. It's pause day, sideways day after a trend day down. Okay, if the market does start to sell again today in earnest, the best short would come from the bond as the knob spread, money comes out of the knob spread. Protective stops and long liquidation. So here we are, the London highs at 20, we're at 10, so 15 to 19 will be sell 1, 23, 27, sell 2. Looking for a pause day on the buy side, 5 to 9, pretty aggressive. Got news to get through first. And then 29 to 01. Leaning against the buck, and that lean against the buck I think is probably the better trade for the 30-year because of potential contraction in the knob spread. Okay, gold was kind of quiet overnight. Found buyers below 95, as we suspected last night. End of the month. Imagine if we do have some end of the month dynamics, it would be short covering. So we're rejecting prices below 94. So we'll make 92, 95 buy 1, then 88.90 buy 2. Play for a quiet end of the month session. We'll make 99 to 01 sell 1, and then 3 to 5 sell 2. Not looking for a big day. Famous last words, right? With gold and crude, you just never know. I mean, when they take off, they take off. Looking at crude, the war premium is coming out. Crude is telling us that current supplies are safe. And just off of the Shia population, Baghdad, a little bit Najaf, the city south of Baghdad, I think it would be pretty hard for ISIS to come in and take over the oil field production, although we do read stories where the rich and famous in Iraq have their bags packed and are ready to bolt. As a person tasked to fight the war, if you're a Shia, you've got a lot of incentive to fight the war. If you're Sunni, you don't. So we're hoping to buy against 99. So 99, 99 and a quarter is our buy zone. And then 98, 50, 75 will be buy 2. On the sell side, 99.75 to 100. And then 125 to 50 for sell 2. Looking at the euro again didn't get a lot of action last night. If you're going to have a shot at the full range in the euro, you really have to play London. We were hoping to sell the 34.10 area, 134 even held, which we talked about. That was a possibility yesterday. So 134 is resistance, and 133.75 is support. We'll make 34 plus or minus sell 1, 10 to 20 sell 2. On the buy side, 75 plus or minus buy 1. And then 50 to 60 buy 2. Remember on the F1 screen there was a little break in the volume at 60, 133.60, so 50 to 60 is pretty good support, and then basically it's 133 even. Thing trades at 50-cent increments, which you would expect. Okay, the E-mini got hit again overnight. We had follow-through selling. The premise for buying stocks since March of 2009 has been Fed support for the markets. If the economy really is growing as fast as the numbers suggest, then the Fed will be able to withdraw their market support faster, sooner rather than later. And that's what the FOMC minutes, not minutes, but statement announcement was. That's how the market read it yesterday. So we got a pretty round number at 1950. I think we got pretty good support, 45 to 50. End of the month profit taking, so maybe a little short covering. The spill was from 60, so we've got starting at 56.50 to 60. So we'll make 59.61, sell 1. Sell 2 will be 64.66. Jobless claims 305, that would be supportive. Nobody will pay any attention to the Challenger job cuts. Employment cost index. And they do pay attention to this because this is labor inflation. And with so many people out of work, nobody's worried about the cost of labor going up quickly to add to the inflation fires. But in that Schiff Casey article this morning, they say inflation is north of 8%. And the Chicago PMI at 63.2. So this will be number 1, jobless claims, and then Chicago PMI will be number 2, and both of these numbers would be positives for the stock market. So buying this 50 area looks pretty good to me. 51 to 49. And then our 45, 47 for buy 2. We're going to lean on support at 45 to 50 and lean on resistance at 60 to 65 and look for a pause day to day. But on this one, short covering is much more likely than it is in the financials, because this is just get on board and see how big a ride we can get. Okay, it'll take at least 20 minutes to get everything up and posted. I'm going to get busy on that. In the meantime, good trading. I'll be back as soon as I can.